Hello traders, Gary Wagner here, just before 11 o'clock in Honolulu, before 6 in New York, on Tuesday, the 8th day of October 2013, and this is the daily report for gold and silver. Both gold and silver were trading higher in overseas trading. As you can see, the high actually on gold was 1330.90, call it 1331. Currently trading well off of those highs, off about $3 on the day at approximately 1319, the low 1315.20. Silver also off of the highs of the day, 2263 was the high, currently 2233, 2206 was the low on the day. And as you can see, we'll talk about this in a little bit towards the end of the show, but we've still got superlative resistance in silver at about 2247. You can see that right here. Here we are, day 8, week 2 of the U.S. government shutdown. They are still absolutely at an impasse. The equities market's down in triple digits again today. As I said, we did have gold higher this morning. We had it higher in overnight trading. We had President Obama come out with a press conference. That was about an hour ago, an hour and a half ago. And from there, we have seen a weakening and softening of the precious metals prices as they come off the low. 60-minute chart. We're going to look at a couple of charts today. But what's really apparent right now, when we look at what we have seen in terms of the marketplace itself since we have seen the government shutdown, very, very short term again, traders, but we're looking at a series really of higher lows when we consider this is at around 1280, and you can see these lows as they came in, they have been higher absolutely all the way up. So we have an ascending bottom right now. However, when we look at the top, we have identified an area roughly at around 1330. You can see that we have touched upon that numerous times over the last couple of days, but as of yet have been absolutely unable to take that mark out. Now, of course, that's a very, very short-term look. 180-minute chart. This isn't Japanese average format, but we're really looking at different areas. You can see the rise right in here. This is the rise, this ascending set of lows. You can also see that there's almost a channel in this market as it has gone up, but we have had, as I said, this resistance roughly at 1330. The other thing that we want to look at, and this is what we touched upon yesterday, I am a buyer in this market if I see this market effectively break above and take out this particular resistance line that we've had. Now, the market is just at that point right now, as you can see. There's been no real substantial breakout. In fact, the market has come quite easily off of those highs, and this is just the short term. On our longer term, if we take a look at these series of tops, and I'll try to draw it in as best I can just to give you an idea of what we're looking at. That seems to be pretty good. We have our series of tops right here, here, and here. That's what I'm drawing it off of. There's no doubt when we look at the market in this way, we're absolutely at, but we are absolutely not above this major point. And so for that reason, I have stayed sidelined in this market, because my belief is that once this issue is solved, and my personal sense is it almost has to be solved. I don't think any member of the Congress is simply going to hold their guns and not pass something that effectively handles the debt ceiling that is coming up in terms of the government running out of money without a bill going through Congress on the 17th of this month. So we're really 9 days and counting on the clock. I don't see that happening. And as we get to the 8th, 9th, 10th, and 11th hour, something is going to break. That's my sense. My sense is also that if in fact it does break and they do resolve it, as I believe that they will, we will see this market take any kind of premium which has been added since the government went into shutdown mode. I believe that that premium could effectively come out of the market. And that's why we're being so cautious right in here. Now, in terms of straight support and resistance levels, we have put up a 480-minute chart, standard candlestick format, one basic fib retracement, and that covers this last major rally that we had, 1181, up to 1435. I still hold absolute support in this market. Just at around 1300, 1306 is where we see that. Critical support, 1276, that's this low that we had on this last move down. Absolutely critical support, 61% retracement of this rally right in here. And in terms of resistance, I see a band between 1330 and about 1335, and that's a 38% retracement of that move. We can see historically, and we've pointed out historically, where the market has reacted. As it comes up, you can see that it is supportive of here. It comes up, it breaks through the first level, it breaks through the second level, but kind of tops right there and then comes down. So we absolutely have real resistance right in here, 1336, real support right in here, 1276. That's where it was first established. Market comes back down. It holds support in this area. Of course, this is where the rally came up, and we hit our top 1435. As this market came down, you can see that it has been supportive right in here, and we have resistance here. So effectively, we lately have had a market that's been genuinely trading between this band here, this band meaning 1300 to 1330. We have seen it dip below there, but for the most part of the last, call it month and a half, it without discounting these breakouts, FOMC meeting here, statements by the Fed here, but aside from these really wild gyrations, swing, you've really had a limited range within the market for the most part of about $30 to $35, trading between 1300 and 1335. Now, when we look at the Japanese average charts, these are half-day candles. We have had this rally that has really begun since the government went on shutdown. You can really see the effective uptrend we've seen here. You can also see this flat top that we've identified. So the market is compressing. We've had a series of green candles, and we'll look at, time permitting, our daily chart. In fact, we'll do that next, but we've had these green candles. But if you notice, in any rally up except for this candle here, we have had a series of lower tails, and the lower tails tell you that even though the market's in an uptrend, it's in an uptrend, but with not a tremendous amount of strength behind it. Now, when we look at our daily Japanese average candles, you get a different story, but fairly very similar information. You can absolutely see this defined uptrend, no doubt. We can see this top right in here, but the top also corresponds to a simple moving average that I put in, and I believe that's a 14 cycle moving average, so 14-day moving average on this chart. You can see that these bodies have remained very well below that point, currently trading at around 1318. You do have green candles, but look at how small, A, the body size is, and B, the fact that we have these lower wicks or lower tails. When you look at a market that's got strength in it, such as we can see right in here, for example, you'll notice that it loses these bottom tails almost all the way up. As a market is moving down, if it's got some real strength in that downtrend, you'll notice you get this absence of these upper wicks. And really, the upper wicks as the market moves down and the lower wicks as the market moves up are simply defining whether or not this candle has traded at or below the midpoint in an uptrend, above the midpoint in a downtrend of the prior candle. That's all that's saying. So this is telling us that has been trading in the range and below the range of the prior day's midpoint. As I said, this marketplace right now, to me, is under some real potential moves in both directions. And the reason I say that, and it's a very odd statement for me to say, in fact, I have trouble as I actually spit it out, but that is, if there is a impasse and it turns out that they cannot solve the simple issue of passing a bill that extends or expands the debt ceiling, you could see gold take off and fly really accelerate in terms of value. If in fact they come up with a solution, a compromise, and raise the debt ceiling and do what they should be doing, you could see tremendous pressure on gold and see it move back and test this 1274 area. For the time being, until we really break above this particular upper level of resistance, even with this uptrend in play, the fact that we consistently get this resistance tells me there is a lot of pressure above 1330 in gold. So what about silver? Well, actually, silver is looking a lot stronger than gold is right now on a technical basis, and I say that for a couple of reasons. We're looking at our daily chart Japanese average format. First thing, look at our moving average convergence divergence, MACD. Market has gone into oversold conditions, but you now see the shorter term MACD line right at a point where it could easily cross. You've got this line this way. You then have your lower line coming up, and if it does cross, that, of course, would trigger, in terms of that technical indicator, strength of a buy signal, first thing. Second thing that we're looking at, when we look at a simple fib retracement, we had a deep retracement here of 76%, 2058. The market does, in fact, bottom, begin to spike off. Now, when we look at these Japanese average candles, take a look at the size. Let's go ahead and blow that up. Take a look at the size of these when we compare these to the ones that we were looking at in our gold chart. You can see there's been absolutely, this one has a slight wick, but not that much, a very, very small wick, maybe one tick, no wick whatsoever here. The body sizes are growing, they're pretty nice. You've got the MACD right at a point in which that would signal a buy. And my sense is because it also has that heavily industrial component, once we've had the equities markets under significant pressure, once this issue, or I should say if this issue with Congress and the Senate and the shutdown in the United States is resolved, you could really see a nice substantial upside move in silver. This has been Gary Wagner wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.